we often find that we work with one or two particularly innovative companies on a feature, deploy it, and then it becomes kind of table stakes for more of the industry. The Facebook IPO was another crisis. At that point, I was at Nasdaq and I got to witness firsthand a very visible technology failure and how you need to manage through that, how you need to engage with all the different stakeholders in a very high pressure environment like that.
Hello, everyone, and welcome to Fintech Leaders, coming to you from New York City. I'm your host, Miguel Armaza. I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early-stage fintech entrepreneurs in the US, Canada, and Latin America. If you enjoyed this conversation, I invite you to leave a review on Apple Podcasts, Spotify, or whatever you get your show so more people can learn about fintech leaders. In this episode, I sit down with Michael Blaugrund, CEO of DriveWealth, a fintech platform and broker-dealer that enables investing products for businesses and consumers around the world. Founded in 2012, DriveWealth works with over 100 corporate clients in almost all continents, including Revolut, BTG Pactual, GBM in Mexico, MoneyLion, and many more. They've raised over $550 million from Accel, Point72, Insight, Greyhound, and many more. Prior to DriveWealth, Michael held leadership roles at Nasdaq and NYSE, and most recently served as COO of the New York Stock Exchange. In this episode, we discuss the evolving needs and expectations from modern retail investors, crisis as a catalyst for evolution. Michael recalls three critical events that shaped the capital markets technology industry over the last 15 years, including the flash crash, why digital assets will not really flourish in the institutional world without clear regulatory frameworks. Michael has been at the role for less than a year. What does it take to succeed in the role of CEO? And just a lot more. Michael, welcome to Fintech Leaders. I want to specifically start about hearing about your background, but specifically as it relates to you spending time in meaningful, important roles at both major US stock exchanges, both Nasdaq and most recently the New York Stock Exchange. Take us a little bit through your career. What did you learn across both exchanges?
Well, I was always interested in the intersection of business and technology. You know, when I old enough to remember the dot-com bubble and, sort of came out of college hoping to go public with an internet-based company. But, always the intersection of new technology and business. And like nowhere is that more visible, I think, than in the financial marketplace. I started my career in finance on the sort of vendor side, working in quantitative analytics and data products with Thomson and Tradeweb and Thomson Reuters. But I always wanted to get a little bit closer to the metal. And so had the opportunity shortly after the flash crash to move over to Nasdaq. And I got to work with some really smart people there who were doing, really pioneering work in electronic trading. Spent a few years there working on the equity product, and then worked at a proprietary trading firm called Tower Research, where we traded on about 120 markets around the world and got to really explore how, the nuances of both market microstructure, but also the sort of business and operational nuance of interacting with different markets really drove different types of outcomes. And I was happy in the prop trading world, but then a friend of mine who I'd worked with at Nasdaq named Stacy Cunningham brought me over to NYSE. And I spent about 8 years there, ultimately serving as the COO. And, at both exchanges, but certainly at NYSE, there's a really bright spotlight and maybe a microscope and maybe a megaphone also. And so you have the ability to use that platform to affect really meaningful change. And that could be broad-based, capital markets reform or US competitiveness or, regulatory microstructure type changes. but you're operating where you have a TV studio in your office every day. And so the expectation is that things have to be perfect. And so, I really developed an appreciation for the institutional caliber, operational excellence that's expected of the US markets. And I think bringing that type of resiliency and efficiency and scale and stability and dependability to the fintech universe is really the opportunity that I saw in moving from NYSE over to DriveWealth.
You mentioned it's been a while since I've heard about the flash crash, and I was in college glued to my laptop as it was happening. And this was pre-fintech, modern fintech era, I guess. Why did you bring it up? It sounds like it was an important event in your career, even though you were not at Nasdaq when that happened.
Yeah, I think in my career, there have been a couple of crises that became catalysts for evolution, right? The flash crash is definitely one of them, right? It's the first time really in sort of modern markets that you had a very visible market failure, right? A public market failure where there was just a massive disconnect between what was underlying fair value and what the current market price was. And people hadn't seen that, and it really awakened the public sort of consciousness to automated trading. That would then, inevitably end up in congressional hearings and regulatory changes. And, now we have market access rules and all these other sort of barriers that are meant to help prevent a reoccurrence of those types of events. But for me, that was a very sort of foundational moment. The Facebook IPO was another crisis. At that point, I was at Nasdaq, and I got to witness firsthand a very visible technology failure and how you need to manage through that, how you need to engage with all the different stakeholders in a very high pressure environment like that, and got a very keen understanding of the real consequences of a technology problem becoming a business problem. And I think the third crisis that I encountered was GameStop, right, in the meme stock trading in early 21. I was at that point at NYSE and had a leadership role to play. And so trying to ensure that the markets were functioning correctly, even if market behavior was, seemingly, kind of profoundly confusing. And then ultimately having to explain that not just to financial markets professionals, but to Redditors, to congressmen and women, to regulators. It was a very challenging time. But I think a lot of the innovation we've seen in retail that is allowing for democratic access and allowing for very broad global participation, which I think universally people want to foster, comes with these other challenges and risks that need to be addressed. And so I think, those three periods really were great learning experiences for me. And you always find ways to kind of address the specifics of each crisis. There'll always be a new challenge to encounter in the future.
Michael, you have been at the helm of DriveWealth for a little bit less than a year at this point.
Yeah, just over 6 months.
Just over 6 months. So you're experiencing what it takes to be a CEO, and I'm sure each story for each leader is different. But if you were talking to someone who's coming in for a different company, also as a new CEO, what would you say are some key things that prepare you for this role?
I think the primary thing that you need to have coming into the role is, I think you really need to have the humility and the awareness and the sort of self-awareness to recognize that this is a team sport. I joined a company founded by Bob Courtwright over a decade ago that had made tremendous progress and, pioneered fractional investing and grew through multiple cycles and, had a tremendous story. But I was brought in to take the reins and to lead and to bring change and to bring institutional grade service and technology and to, quote unquote, take the company to the next level. And so someone might come into that and think, well, I need to really shake things up and do this my way. And what I realized was that, there were people here who had built the foundation of this company who have tremendous domain expertise in finding ways to nurture that and maybe bring a new playbook, into the locker room, so to speak, as opposed to kind of like replacing the whole program. For me, I think being aware and knowing how to sort of to extend the metaphor, how to put the players into the best position on the field, that's really the difference between being the CEO and just being another senior leader.
Why take the role? Maybe take us a little bit through how you're approaching the opportunity. Maybe let's hear about some of the core offerings of DriveWealth, all the good things that you guys are doing.
So DriveWealth is a financial technology platform whose main business is providing brokerage as a service. We're an API-first brokerage platform, and we provide the pipes and plumbing that allow our B2B partners around the world to offer trading through either mobile or other online applications. And I was introduced to DriveWealth when I was at the New York Stock Exchange. They were a member of the exchange, and I saw that they were growing quickly and evolving, and really, I thought, uniquely seeing around the corner. Right? They were the first to introduce to me the idea of embedded finance. And it clicked for me right away that the future of finance is going to be invisible. It's going to be automated, might even be autonomous. But DriveWealth, and Bob Corey, the founder, they recognized this need to offer a modern brokerage infrastructure that was going to be the fabric from which those new types of investing experiences could be woven. You think about retail behavior today, right? We all go on our phone. We want to buy something from Amazon. We sort of expect it to be there within an hour. We're disappointed, if it takes a whole day. But it wasn't that long ago that even in the United States, retail investing was, measured in minutes. It was a website. It might cost, $10 to trade. The retail consumer today is not going to tolerate that type of convention, right? They want to trade overnight. They want to trade in notional terms, meaning, I don't want to have to buy a whole share. I don't want to even think about shares. I mean, that's kind of orthogonal, right, to how they're thinking about managing their own finances, right? I want to put $10 in something. I want to put $100 in something. And so DriveWealth pioneered this idea of offering fractionalized investing, which permitted not only portfolio diversification for people who didn't have a lot of net worth to invest, but also made available the power of dollar cost averaging over time, and the power of compounding. And so now you have the ability for a very broad swath of people to participate in the market and get the benefits of all the wealth creation that, free enterprise and public markets have been able to bring to bear.
So that's fascinating. And how about, you mentioned that the consumer has different expectations, right? Where do you think that's going, right? So we've seen the change of the last decade. No one has seen it closer than you have. How about going forward, which is where you are thinking about the future? What are going to be the expectations of the retail investor over the next 2, 5, 10 years?
I think you have different archetypes of retail investors. And, the way that we think about our partners, right? Because we're always a sort of B2B relationship with a local partner who then has their own customer base. We work with digital wallets. We work with banks and brokerages. We work with consumer brands. We work with asset managers. And then we work all over the world. Our business is very balanced between the Americas, Europe, and Asia. And so we might work with, a digital wallet in Asia, where the local sort of cultural norm is more of a speculative activity. And you're going to have investing workflows that are sort of built around, opportunity and more sort of speculation. Then we'll work with people in other regions that might be very focused on capital preservation, right? They might be focused on trying to avoid, local currency exposures or interest rate risk. And so, I think what we're going to sort of see over the next, 2-5 years, as you were saying, is we're going to see a broadening of the demands of retail. So historically, maybe they just cared about, S&P 500 stocks. Well, now they want not only all NMS stocks in the US, they want fixed income. They want mutual funds. They want options. They want ETFs. They may want local instruments as well. And so I think, providing that sort of single API that lets the partner for their end client design a workflow and an investing experience that's going to be powerful, that's really where the puck is headed. The other dimension beyond sort of the breadth, if you will, of product coverage is time of day. I think whether it was crypto or, other sort of online experiences, the modern investor, particularly retail investor, is just not interested in the market convention of, trading from the opening bell to the closing bell. They want instantaneous, liquidity, and they get that in every other part of their life. So for them to not have it in securities trading is just kind of archaic. We recently introduced 24-hour trading, which, has immediately become a very significant portion of our overall activity, because that's one, daytime in Asia, and two, it's an opportunity for people who think that they have a thesis on what's going to happen tomorrow, and they want to express it tonight. So it's been very interesting to see how the institutional conventions that I've grown up with over my career, up to this point, once I got into the seat, realized, I've got to reassess what's actually happening on the ground.
Didn't the stock exchange used to have a lunch break many years ago?
They used to have lunch. They closed on Wednesdays, right? There was a period when they closed on Wednesdays just to kind of catch up with the paperwork.
Yeah.
I mean, look, the stock exchange today is a very, very technologically sophisticated organism. They'll process over 500 billion messages in a day. But, getting from where they were in the 20th century to where they are in the 21st century was a big lift, and I got to work with a number of really skilled technologists and business people from ICE and from NYSE to implement what is called their pillar technology system. And so in the same way that we sort of modernized, the sort of traditional trading floor into a 21st century computing system, we're going to bring that same rigor to DriveWealth, right? We're going to build a platform that meets the expectations for global investors so that they can, trade any instrument, anywhere, anytime.
So clearly the reason why you've launched 24/7 is because the demand is there, the appetite. You've listed some of the reasons: globalization, just technology. How about, do you think crypto has had any influence on that expectation, given that crypto has been 24/7 from the onset?
Yeah, I do. Though interestingly, DriveWealth's DNA comes out of the FX market, right? And so the FX market has been 24/7, forever. And crypto, I think, kind of adopted that convention. So Bob Courtwright, the founder of DriveWealth, came out of FX and saw that you could trade, $1 for yen. And then yet when you came to the US equities, the most sort of flagship market in the world, it was 930 to 4, and you had to buy a whole share. And so taking that FX experience, which in many ways was emulated then by crypto, and applying it into the US equities space was really sort of the key innovation that launched DriveWealth.
Since we're talking about timing, how about T+0 settlement? Do you think that will ever be a reality? We're barely moving to T+1. We're not even there. I'm sure you think about this a lot.
Yeah, T+1 is going to be a significant step. I think end of day settlement, a T+0 sort of end of day settlement, is probably achievable in my career. Instantaneous settlement, I think would be, just as a policy question, I'm not sure that it's the right policy outcome. The benefit of netting trades that occur over a period of time so that you can compress the settlement allows for credit and margin and scale and efficiency in the marketplace, that if you had to pre-fund every single trade, I think would result in a real degradation of market liquidity. So I think the efficiency we get for capital by moving from T+2 to T+1, it makes that a no-brainer. And, I'm excited to see that come to pass in a few months. Although I would say being at a broker-dealer versus at the exchange, I recognize there's a lot of work for the broker-dealers to actually get ready. But yeah, I think instantaneous settlement might be, maybe there's some implementation date far off in the future, but I don't see it in the near term.
Yeah, so you're actually recognizing that having a bit of a delay for the settlement, even if it's at the end of the day, can actually be a feature, right? Not a bug.
Certainly. I mean, look, one of our core innovations and ways that we work with our partners is to offer what we sometimes call cashless brokerage for our digital wallets. And, effectively what that really means is that someone who has a digital wallet is able to very, very quickly pass through the right approvals to open a brokerage account. This all sort of happens behind the scenes. And then they're able to place a trade without having to wait for the funding to go into that brokerage account. If you had T+0 instantaneous settlement, that workflow would become impossible, or it would become, cumbersome and sort of undesirable. So we're actually able to open up and create more opportunity for a broader swath of investors with something that allows for credit to be extended and ultimately for the efficiency of netting off buys and sells by intermediaries.
Michael, you mentioned having clients all over the world. Maybe tell us more about the global potential. Does your product look exactly the same if I'm a customer in Asia? Are there differences? What have you learned? What does a company learn about working with international investors?
Sure. So the API is universal. We don't have kind of localized versions of the API, but we do configure features based on, potentially local regulatory requirements or partner requests. So sometimes we work with people on a fully disclosed basis. Sometimes we work with people on an omnibus basis. In some jurisdictions, we support fully paid securities lending. In some jurisdictions, that's not permitted. So there are a number of different configurations that we might employ. The goal of our business is to reach a very sort of high operating leverage and scalability. And so, we want to build things once and use them many times. And so as we add features, maybe that's a feature for a digital wallet in the United States, for example, well, that becomes available then for, a bank in Brazil to consider. And so people who maybe are incumbents, but want to compete with the disruptors now have that, kind of in their toolbox to employ if they choose. And so we often find that we work with one or two particularly innovative companies on a feature, deploy it, and then it becomes kind of table stakes for more of the industry. In the United States, we work with a leading digital wallet called Cash App. We work with neobanks, like in Europe, we're with Revolut. We work with major, fintechs like Toss Securities in Korea. And we recently announced that we're going to power the US securities investing product for BTG Pactual out of Brazil. And so I think that, between winners like that, you get really, really good ideas and you're able to kind of parse them and prioritize them and then bring them to market and let everybody benefit from that all being available on the API.
Michael, I wanted to zoom in on something you did a couple of years ago. You actually headed to Congress to testify.
Twice.
Yeah. And one of those, you were talking about the urgent need for a clear regulatory framework for digital assets. Why do you consider this an urgent issue?
Well, I think from the exchange's standpoint, when I was there was a real chicken and the egg problem, right? You had brokers who wanted to support their customers that were interested in trading digital assets, but they were precluded by regulation from doing that, right? There was no clear way that they could both trade traditional securities and digital assets. And so people were trying to kind of come up with their own, their sort of their own recipe of how to navigate that. And so it put, real jeopardy on people that wanted to follow the rules, but didn't know how. Now, and because of that ambiguity, that the sort of chicken and the egg problems, because of that ambiguity on the investor side, issuers weren't going to get liquidity by issuing digital assets. And so, there was, for a time, a lot of interest in, if you remember, ICOs and sort of other, ultimately, fairly unregulated issuance. But in the absence of really clear guidelines and, regulatory instruction outside of enforcement action, a lot of institutions have sat on the side. For ourselves, we considered introducing crypto through our platform. We've actually shelved that. The regulatory uncertainty makes it unattractive for us to offer that in tandem with the core business.
Yeah, you answered what was going to be my next question. What is DriveWealth's role going to be in crypto? So you shelved that, but it sounds like you're just shelving it. It's a wait and see game.
That's right. I mean, look, many of our partners found crypto-only solutions to power that part of their business. And, if crypto interest comes back to the crescendoed levels that they reached before, maybe we'll reconsider entering that space. But right now, the customer demand isn't so strong, and the regulatory uncertainty is pretty severe.
Makes sense. And so how about in general, when it comes to capital markets, like what are you most concerned about, most focused on for the future? What changes would you like to see?
I think that, what we see with our partners is, a real interest in offering, true diversification to their end clients. So, we now support all manner of securities, equities, ETFs, fixed income, funds, options, being able to sort of bring what used to be a sort of institution-only concept of diversifying your portfolio based on notional exposure. That's now something that anybody with a phone can do. So I think you're going to see a continued sort of path towards lower friction, lower cost, efficient, stable, safe platforms like DriveWealth that then enable our partners to make that experience available to everybody around the globe.
I guess now I understand what you mean. I've read somewhere you aim for industrial strength brokerage as a service. And I guess what you're saying is you want a retail customer like myself, for example, to have access to the tools that a Goldman trader would have, and maybe we'll never fully get there, but as close as possible.
That's right. I mean, I think one of the things that attracted me to DriveWealth was that it had a very unique set of capabilities, right? We have the APIs that power our partners' front-end experiences, and they each build their own workflows for their own user base. We have an institutional trading capability, which allows us to provide additional liquidity and trade with our retail firms and then exhaust out to the street. We also then have a SEC lending capability from that institutional business. And then finally, we have the traditional clearing and custody capabilities as well. Being able to harness all of that and put it in service of an individual investor who might be in Uruguay or Thailand. I mean, that's a very, very modern innovation. And the power of our business is that we can build it once and then deploy it across the world.
And, since you work so much with public companies, do you think DriveWealth at some point will consider joining public markets?
We're going to manage the company as if it were public. We're going to focus on building the best company we can. We've grown the top line 20% or more over the past 4 years. If you think about the cycle we've been through, that's a pretty unique profile within the fintech space. So we're really focused on continuing that growth, focusing on those customer archetypes of digital wallets, banks and brokerages, asset managers, and major consumer brands. And, I think we're in a fortunate position where we can sort of control our own destiny with respect to, if and when we need to go to the public market.
And if someone knows what it's like for a company to operate as if it were public, it's you that you've been working with so many public companies. Well, Michael, thanks for doing this. I know a lot of people in the industry are very familiar with DriveWealth, so I'm sure they're going to be paying very close attention. And I'm very grateful you took the time to stop by.
Thanks for hosting me virtually here. And, we'll find a time in Lower Manhattan to do it in person.
Love it. Love it. Thanks, Michael. Thanks for tuning in. I hope you enjoyed this great episode with Michael, CEO of DriveWealth. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and truly means a lot. If you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off till next week, I'm your host, Miguel Armaza.